How to test your strategy. Once you have a system, it is very important that you apply the concept of trial and error to your system and test to see how it holds up historically. What I mean by this is that once you've created an idea, for example, our past example of the Bollinger Bands and overextended RSI trading system, we need to take that idea and see how it actually does in the market over history. So this is what is called a back test. It is almost like an experiment. Once you have your strategy rules set up, you need to see how well those rules actually do. Now, a backtest does not necessarily mean that your strategy is going to succeed in the future, but it is definitely positive. The strategy performing well over a large sample of data in the past says that there is a good chance that in the future the strategy will continue to do well. This is a huge plus for trading your strategy because you'll have more confidence. For example, the algorithmic strategies that I run have backtests going back to about 1995, all the way back today, and they show positive edges in the market. You need your own system with an edge that is very clear over large sample point data. So to do this, how can we get started testing our system? Well, for one, if you do have programming experience, you can actually program your system in MetaTrader. I'll have a future course going on about all about expert advisors or automated trading systems, and these can be automatically backtested in MetaTrader 4. But assuming that you don't know how to code or you are not interested in finding a person to program your robot for you, you can test your strategy manually. Before I knew how to program in MetaTrader, I did this myself. So what you can do is take your strategy, just like we did on the previous video and took a look on the chart of examples. You can go back and manually, with a piece of paper and a pencil or an Excel spreadsheet, go back on the charts and test your strategy. Find where you would enter, find where you would exit, and go as many trades as you would like, or as many trades that you would feel comfortable with calling a backtest, and see how it does. So we showed you some previous example trades with our sample strategy. Now what you could do is take that same strategy or your own strategy, scroll way back on the chart, and painfully slowly go through and test how your strategy would go. I say painful because backtesting is not always fun. Sometimes it's very slow and it takes a lot of time. But this is an extremely necessary process for anybody who is serious about trading. You need to know if your strategy seems to work. Otherwise, why trade at all? You need to have a plan, and you need to have a plan that has a history of success. So with that said, one more thing that is imperative to having a well backtested strategy is that you have a lot of trades in your experiment. You can't just look at a strategy and see if it works 5 times, it must be a profitable strategy. Instead, you need to know about the best of times and the worst of times of your strategy. How much risk or leverage should you use in this strategy if you have a certain drawdown? For example, if you have a 20% drawdown at one point in your trading strategy, you should not exceed a bigger lot size or a bigger position size, because if you go with too big of a position size in this case, you run the risk of blowing up your account. So you need to know what is your strategy's weaknesses and what are its strengths. Does it trade in certain markets well? Does it trade poorly in certain markets well? If the market is highly trending, does your strategy do better or does it do worse? These are all examples of using trial and error and experimenting with your strategy to find your edge. Now, one other thing is that once you do find a strategy, a major pitfall for traders is they find a strategy that seems to be a profitable strategy and have an edge, but they ruin the edge because they let emotions get in the way of their trading. Once you have your strategy, it is imperative, like we mentioned earlier in the course, that you plan your trade and trade your plan. Experimenting and backtesting is planning your trade. Once your trade comes up on the chart, you need to trade your plan. These are some simple tips, but they actually make a world of a difference for traders. And testing your strategy and applying it as you tested it is extremely important in creating a successful trading career.
Yeah.